Hello, my name is Alon Bender. I'm an entrepreneur from Silicon Valley, and I raise money for several of my startups. And today I'm going to share with you how to get funding to launch your tech business in 7 days or less. So let's jump right into it. So, who is this really for? Whether you're a solopreneur, just you starting a business, maybe it's an AI automation business or AI automation agency or some other tech business, can be SaaS, can be, frankly, almost any tech business. Whether you're an entrepreneur, a founder, this is really for you. So let's start with really what are we looking to achieve here? Get funded without a VC for a startup, doesn't have to be AI. Whether you are looking to raise $50,000 or maybe seven figure, starting from day one, like I said earlier, up to first 7 days, I'll show you how I did that. But before we do that, let's understand what is the challenge and probably why you are here in the first place. The challenge is that venture capital, institutional banking, and institutional investors, they only invest at 0.05% of startups, and those are the startups that are actually applying for funding. So the vast majority of startups out there actually don't even qualify. They don't even try to apply for funding using this method. So that's really the problem. The problem is, okay, so how can I fund my business, my new startup, if my chances of getting funded is really extremely low, considering these numbers. So the next question is, before you consider which path you should take, is do you even qualify for institutional funding? What does that mean? That means, I'll give you a quote from one of the largest Silicon Valley VCs. They have about 600 billion plus under their management of investments. So it's one of the largest in the industry. And when I spoke to one of the general partners, basically told me, we are looking to swing to the fences. We are not looking at smaller investments or business ideas where the business idea may be great for the founder. It can make a lot of sense. But from their perspective, they're looking for very high returns. So you may be okay starting a business that only generates yourself $5 million a year, $10 million a year, $25 million a year. It's not okay if you're a VC. So they're looking to swing to the fences, and that means that their mindset is completely different. If I were to dumb it down, basically, if you don't have a path to $1 billion in valuation or value, then you're not really qualified to apply for funding with the VC. On the other hand, do you really want your business to, all of us want, but realistically, will you be okay making only $50 million per year or building a business that is worth millions of dollars and exiting that business without swinging to the fences? For most of us, the answer is hell yes. So, is your solopreneur generative AI ideas investable in the first place? Is really an important question that you need to think about, especially if you're in the AI space, which is where I'm focusing on. So if it's just you're just starting, maybe you have another co-founder, a friend, a colleague, or another co-founder, and you're just starting the business, you may come up with an idea that you still want to prove, first of all, to yourself that you have market fit, And at that early stage, you are not investable in most of the case. I would say 99.99%. You are not investable because, like I said earlier, and I showed the statistics, 0.05% of startups actually receive venture capital. What this statistics doesn't show you, doesn't tell you the full story, which is they do invest at 0.05% of companies that actually qualify their criteria, which is swinging to the fences, and that's a much lower portion of the number of companies out there. And more importantly, the fact that you want to get going, you want to get some funding, and that's obviously very challenging, and in most cases you're not going to even be qualified. Investors are looking for product market fit, that's PMF, and low risk. That's really what they're focusing on. Now, if you are there already, you have PMF, you have a start of revenue, and when we say typically a start of revenue, it's at least 250K ARR, annual recurring revenue. Then you can start to have conversations with institutional investors. However, if you are not there, there's, like we said earlier, there's no PMF, no product market fit yet, and or you may not build something that is necessarily targeting to become the next unicorn. Those are very few. That's why it's called unicorn, imaginary animal that doesn't really exist. Then there has to be a different way. But let's understand what investors are actually looking for, whether you use alternative funding methods, which I'm going to share with you, or you are still thinking about, okay, but how do I get that institutional investor to consider my company and make myself more investable? So just understanding what investors are looking at specifically in generative AI, you can see on the slide, acquisition potential, innovation, early stage opportunities. Do you have a global impact? What is your total market size, TAM, total addressable market? What are your competitive advantages and your secret sauce, basically, and where is your IP? What is your intellectual property? So those are very rough, high level. Even if you have all of those ingredients in place, then the probability of you raising money from VC is extremely slim, as I mentioned earlier. So if you are not part of those lucky that 0.05%, where the actual percentage is much lower than that, because you may not qualify, as I said earlier, to a VC, doesn't mean that you don't have an amazing idea, and doesn't mean that you can achieve the lifestyle and the financial freedom that you want with your idea, or you want to prove to yourself and work with the market and test your product. And in order to do that, it requires funding, requires money. There's no such thing as starting with zero investment and zero upfront cost, expecting to bring something amazing. That's not the case. You always have to spend something, especially if there's real quality, if there is real value in what it is that you are innovating. So where to start? Let's just dive right into it. So first of all, the most important thing is you need to define your specific goal. Like I said earlier, what's your goal? Are you looking to go after a specific market? Are you looking to disrupt something, a service, a process, a business, a vertical? And what is your financial goal? So that's the most important thing. Once you have that goal in mind, and hopefully written as well, then you need to think about what are the prerequisites. What do you need in order to achieve that goal? What are the tools? What are the platforms that you need in order to achieve that goal? It's not just the technical tools and platforms. I'm not talking about the software tools, the AI platforms, anything like that, but really, if you go after the finance industry, if you go after manufacturing, if you go after retail, each one of those verticals has some certain type of expectation. So once you define your prerequisites, now it makes it a little bit easier to go to the next step, which is where to find money now that I understand what's my goal, what I'm looking to achieve, and what are the basics, what are the prerequisites that I need in order to get going. So one of the shortcuts that I learned the hard way. So my background is really Silicon Valley entrepreneurship, and that means that I built startups, built companies. I was a co-founder, a CEO. I was a co-founder in other companies. I was head of engineering in multiple companies, and over the years, I've learned how to manage teams, how to build enterprise grade products, very complex, very complex architectures, etc. And one of the challenges, especially at the beginning where you are at, is to learn to fail fast, because the faster you fail, the quicker you get to a win. How is this related to funding? It's related because you need certain tools, a certain ways to be able to execute failure much faster, and that's not something that any institutional investor is going to fund for you. So that's why we are looking for other ways to get funded. So the idea here is really that you can bootstrap all the way to your goal, and or you can start with creative funding and then at a later point of time consider institutional funding or maybe some other approaches, exiting through corporate acquisition, etc., which I'm not going to cover in this video. So let's talk about a blueprint. I put together a 5-step blueprint. The first one is really, step one is around your goal. So we discussed that earlier. What's your business goal? What's your time estimate? How do you estimate that you're going to achieve that goal? What do you need right now in order to execute within that timeline to achieve that timely goal? And what will you need once you're up and running? Because one of the things that many entrepreneurs are not thinking or considering, especially from the get-go, when they just start, they're just eager to get something out there. They're eager to get the first customer. They're eager to have the prototype. They're eager to have the MVP. They're eager to prove a product market fit. They're eager just to focus on the next step, because each step is a major milestone. It's not easy, it's intense, and it's high pace, and you don't really think longer term. And the risk is, if you don't think longer term, your funding strategy may be the wrong one, or you may just get stuck, and then you will achieve nowhere. You will not achieve your business goal. So this is really where it's important to think. And I give you a quick example, or based on my experience, which platform should I use? Should I use a Replit? Should I use AWS? Should I use GCP, Azure, or any of the other 50 cheaper host service providers that I can find out there when I'm building my AI application or my SaaS, etc.? So those decisions are not just technical decisions, but they also have implications on your ability to win a customer or convert from where you are to the next stage in order to meet your timeline, not to have to start everything from scratch. And why am I even talking about that? It sounds more technical or more less about funding. No, it is about funding, because one of the things that you need to be able to do is to take everything I'm covering here, from your business goal, time estimate, what do you need now, what you will need in the future once you are scaled up, and what is going to be your minimum burn rate. All of those things you will need in order to get creative funding, not through a VC. So some of the prerequisites for your success and the way that you prepare yourself for serious growth, for hyper growth. The first thing is the tech stack. I'm not going to dive into that. That can be a whole discussion by itself. But understanding what is the tech stack that you are going to work with and selecting that carefully based on your knowledge, your skills, what you're most comfortable with, what's the best fit for the customer, cost effectiveness, etc. So choosing and understanding the tech stack is really important before you even approach, before you build any product, and before you even can approach any sort of funding. The next one is legal. Do you need a legal entity? Maybe yes, maybe no. You may be able to start without the legal entity and then worry about that once you have a big customer. Typically, especially if you're in the B2B space like I am, any large customer, any large company that you want to do business with, if you're thinking about making some serious money, will require that you will have certain structures. Also, your ability to attract investments requires certain legal structures in order for you to be able to execute that. Those structures or the structure options can be a little bit more expensive than operating under your name, which it's just not going to work. You're sending the wrong signal to the market and the wrong signal to yourself. You're not taking this seriously. It's not a business. But if you are doing it in a way that is more scalable and investable, that requires some investment in the legal structure. But don't worry, I got you covered. You can get all of that fully funded, so it will be zero out-of-pocket money for you. Zero risk. You're not giving anything. You're not using your credit card, your line of credit, or anything like that. You're not taking any personal risk whatsoever. So now that you're aware of, you start to open your mind to the opportunities and to the options that truly exist out there, that may actually allow you to think bigger than where you maybe were thinking up until you started to listen to this video. Next one is financial. So from financial perspective, same thing. I mean, at the stage where you're just starting a product or just starting to work with first customers, or even later when you're starting to scale up, I wouldn't worry too much about financial, but I'm going to share with you a few secrets about that as well. GTM plan. So go-to-market plan, a high level, written, not verbally. You do need a plan. You don't need to start writing down that plan before you started with a prototype and before you have your first customer. But I will take that back. You can put together a GTM around something that you still don't have a market fit, proven market fit, but you have enough confidence that you know what niche you are going to target, who is your ICP avatar, who is your buyer, and how you are going to find them and how they are going to find you. That's really your GTM. So this is something that you can put together, and that will allow you to access more funds and get more funding outside of any VC. And lastly, a business plan. Don't worry about a business plan. Don't write a business plan before you have a prototype. Don't worry about that. Worry about your tech stack, the legal stuff, financial. You definitely need a corporate bank account. And those vehicles will allow you to, assuming that you're building a product solving for a real pain that people understand and appreciate, those will allow you to accelerate and just take you much, much further, much quicker, etc. So the business plan is not a prerequisite as far as your ability to start now, but you will need to at least be able to put together a business plan in order to access the funding that is non-VC that I'm going to share with you now. So let's start with the, I call it secret number one. Number one is your tech stack. So you can get free credits from, frankly, whether it's AWS, Azure, Microsoft, or GCP, Google. Each one of them have their own program. Now, my background is developing large-scale applications, SaaS, for enterprise customers. And those require to run on something that is compliant, secured, etc. Now you can run on Replit on some of the cheap platforms out there that are not expensive. It's not a big investment, but that means that if you will ever want to sell your product, offer your product to a larger company or even a small company in any regulated industry, you will run into a roadblock. That's number one. Number two, let's go back to funding now. Those companies actually invest in you not because they like you or they believe in your idea, but because when you are successful and when your application is growing, the utilization or your usage of their platform is also growing. So that's a win-win from their perspective. Just to give you some numbers. So for my own company, I was able to get $145,000 from AWS, Amazon Web Services, to prepay for everything I needed to run on their platform. And that was before I had the first customer. And that also meant that in addition to that, I got access to all kinds of resources, people, engineers, architects that I was able to work with in order to build my product in the right way on their platform, on AWS. So that can be an amazing path that I don't think many people are aware of those programs. So when you just open an AWS, it starts with $2,000. It's called an Activate program. You just go online, you register, you open an account with AWS under your company, and they immediately give you $2,000, which is, it's not a lot. The shortcuts I'm talking about, it's not about that. It's not the Activate program. It's taking that to a completely next level, and those amounts are significantly higher. And I know firsthand because I've been through the process for my own company, and I know that that's accessible not just to me, I didn't do anything special, but to anyone who is building a new solution and decides to choose AWS in this case. Now, GCP and Azure, they have their own program. My first-hand experience is AWS. That's my go-to platform for many reasons. But GCP is great and Azure's and Microsoft is great. So you may want to consider or reconsider using those cheap hosting platforms in favor of a big company that will sponsor you or will pay in credits for all of your operations. So why spend money on a cheap platform that is not compliant and it's 100% out of pocket and you have to pay? And if you need to scale up, your cost will be actually much, much, much higher than where you started from. And then to make the switch is a major headache when you already have customers. So this is an amazing resource that you may want to take a look at. Another one is Silicon Valley Bank, and I included the link here to their offers. So Silicon Valley Bank, I've worked with them for several years under multiple startups, my startups, and every time I've used their credits, it's free, no commitment, no equity, no risk to you. You are not using your personal line of credit or anything like that. They give you deep discounts within their ecosystem of partners. By the way, AWS is one of them. They give you $5,000 in credits. And they have a long list of other vendors that they're working with. Now, the program that I was referring to earlier when I was talking about AWS, it's not that. It's not the Silicon Valley discount and credits. It's a completely different program that is run directly by AWS. So you will need to contact AWS and really apply for their program. For more complex tech stack, you can apply for a much higher funding by AWS. So what I can tell you, not firsthand. So firsthand, I raised $145,000 just from AWS to cover all of my costs to build and maintain a very large infrastructure for a single app. This was in one company. I raised other money from them from a different company. So what I can tell you is that within the space of AI, if you are using AWS AI as a platform, which I'm not using, if you decide to use their AI as platform, they do have also credits and funding programs. And I know that from my network of friends, founders, CEOs of startups, and those are in the 7-figure range. The reason is that the token utilization is expected to be very high if and when any of those applications take off. And if your business plan is appealing, going back to my previous introduction around the prerequisite, and now you start to see why I even brought it up, that you can make the case and then get a much higher 7-figure type of credits from AWS, because they know that you can go to others, you can go to GCP. So there is a healthy competition there, and those companies have lots of cash, and from their perspective, they invest in themselves. They are not investing in you. From their perspective, they are really investing in themselves. So this is something that is accessible to all of you as well. Secret number 2, legal. So earlier I said that in order to scale, and if you're thinking about something that is very investable, and you may want to open up an opportunity to bring in private investors, angel investors, institutional investors, anything like that, or you're thinking about maybe building a company, selling a product, taking that as far as you can, and then selling that company needs to be in a certain structure, legal structure, that should be done in the correct way. And yes, you can go online and register a company, LLC or C Corp, etc., and do it yourself. But then, 1, you have to pay. 2, you do it yourself instead of doing more important things that you should be doing, like building your product and finding customers. And 3, you can do that much better and also build a network and accessibility to investors and to a much bigger network that will really allow you to scale up and to play at a much higher levels than where you can when you are just go on LegalZoom or wherever and you register your own company. So I shared a couple of examples. The amazing thing about that is that all of these companies, I mentioned 3, there are obviously more than 3. The first 2, those are the first 3, I think, but the first 2 definitely, those are the leaders in the startup space, and they will fully fund your legal package. So you will have 0 out-of-pocket expenses, and they will pay everything. And those are the top-tier legal companies out there that specialize in the tech industry. That means that they are connected to all of the investors in the tech industry, all of the VCs. This is really, you're going directly into the center of the tech industry. And that's, I assume, where you want to be. And if I assume wrong, then you're limiting yourself and you're preventing yourself from many future opportunities for your startup and for your business. So I mentioned that some ranges here, the bare minimum is $5,000. So most of them, if not all of them, they will basically say, hey, if you work with us and you will allow us to register your company and incorporate and do all of your paperwork, we'll give you all of the documentation that you need, etc., and do it the proper way, make it highly investable. So from legal perspective, you have the right structure. that is built and used by the top investors in the industry from day one for free without you spending one dime. So why not? Why not use that? So I shared based on my first-hand experience. This is not me. This is not Google. This is me working with all of these companies firsthand. So this is from my experiences. And you can see kind of the ranges. Some of them have a higher range, but I would say, especially if you are a smaller business, definitely 5K would be the starting point. But some of them will actually sponsor you at a much higher level. As you can see here, one of the examples is on a range of 5 to 15. I know some higher ranges as well, but that's money that you don't need to spend. You make your company much more investable. That's why I covered the earlier topics. And it brings you into a network where you want to be to open up your mind and your business to more opportunities. So that would be secret number 2. Secret number 3, I kind of hinted about that. I've worked with several banks. Actually, I work with many banks throughout different companies. But the most prevalent one is Silicon Valley Bank. Silicon Valley Bank is the most suited bank to work with based on my experience and other people, other entrepreneurs, top entrepreneurs from the industry. There are other banks as well. They're not the only one. They're based in California, but they have branches in different places. Then you want to have a banking system that allows you to operate without any out of pocket. Now, there are a few advantages of using something like a corporate bank for the tech industry, like Silicon Valley Bank, and there are a couple of others as well that specialize in the tech industry. Number one, there's no out of pocket for you. Number two, you're not running on your line of credit, so you don't need to have good, amazing credit. You're not taking any risk here. And number three, going back to the legal aspect earlier, same thing here. You open up a door to another network of opportunities. And I'll give you a couple of examples, maybe. I'll give you one example. The one example that I will give you is that when I was working on my pitch deck, my investors' pitch deck, Silicon Valley gave me free access to a team of specialists from Silicon Valley Bank to review my pitch deck, to give me feedback, to help me make it better and more effective. They are connected to all of the VCs. Most of the VCs actually park their money at Silicon Valley Bank, and others, I'm sure. But that's another venue for you to have access to another form of funding, which is use banking with no wire fees. So if you need to wire, you don't need to think about it. No minimum of balance. So if you don't have $500,000 laying around somewhere in cash, then you can still open a corporate bank account and enjoy all of those resources that are typically only accessible at a much higher levels. And you can do that from day zero, from day one, before you even start anything. So I think that's great. When it comes to financial funding, the second part is your ability to raise money from friend, family, from what is called private investors, angels, etc. It's very easy if you follow the steps that I suggested here, that you have your prerequisites in place. Before you start all of that, you have a product that addresses a real problem and the market wants your solution. There's a real pain, and the solution that you came up with is something that people want. Because if this is not something that people want, all of this will not somehow make you successful by itself. However, all of these tools and access to different sorts of funding creatively will make your journey much more effective, and actually much faster. So going back to private investor SAFE. So SAFE is the most standard, it's the industry standard agreement. It stands for Simple Agreement for Future Equity, SAFE. It was actually created by the Y Combinator, and that's where you can download that original document. Everybody accepts that, so that it's institutional and investor friendly. So if you bring in private investors, the way that you bring them into your company from a legal perspective and financial perspective, those details are very, very important. So even if your uncle or your mom or anyone else, your best friend, wants to help you and give you $10,000 or $25,000 or whatever amount of money, you want to structure that in a way that your company is always investor friendly at any point of time, because you never know when that point of time suddenly comes and you want to be very investable, that your company will be very investable. So that's why those details are important. Now, SAFE, the nice thing about it, zero cost. It costs nothing. The form is free. I included the link here where you can download the form. There are different versions of the same SAFE. You can read it. It's very straightforward, very simple. You can ask ChatGPT to guide you. It's very simple. And this is the standard vehicle to raise, even if you raise $5 million, you can do that on a SAFE. If you raise 10K, 5K, 25K, you can do that on a SAFE. If you want to allow it to a company or a person, individual person, or a trust, all of those different legal entities, they can invest in your company through this SAFE program. Very simple, extremely powerful, and it's a no-brainer both for you as well as for the investor. So I highly encourage that if you are thinking about additional sources of funding through private investors, use this vehicle as the best approach. Secret number 4 is your GTM. So I talked about that earlier, that it's critical to understand your avatar, your ICP, who is your customer, why the customer would want to work with you, what's your IP, what's your unique superpower, why would they buy now, right? So this is part of your pitch, part of your story, and you need to have that pitch or at least craft it as soon as possible. Now, it takes a trial and error. If someone will tell you that they found the magic wand where you can just wave the wand and they will know exactly from the get-go how to answer all of those questions and come up with the perfect product from day one, I have some ice to sell you if you believe that. So all of these things are really important to have, again, to make yourself as investable as possible, because this supports all of the other strategies that I was talking about. So as you progress, as you start, always bear in mind that you need to have a very clear GTM, and that GTM will be required by different opportunities, funding opportunities that are available to you. And that's really important to build it, fine-tune that, and not wait for the last second to do that. Lastly, the business plan. So to qualify for six-figure free funding, you will need to submit the business plan. And that's what I did. Now, I wouldn't sweat about that. I wouldn't spend weeks and months to perfect a business plan. Don't worry about that. When you get to the stage where you want to get additional funding, and the type of funding that is available to you through vendors like AWS, they will require you to have a business plan. And in many cases, the way it works, you actually engage with an AWS partner, and through that AWS partner, they will work with you and guide you through a questionnaire. They will send you a document they will need to fill out that is going to spell basically your business plan for the next 3 years. Now, you may say, I don't have any customers. I'm just thinking about building a product, but I want to have access to, $200,000 or $100,000 to fund my endeavor. Can you go through that? Yes, and the but is the business plan. So the business plan has to be as real as possible, as far as true to the potential, the market, who you're after, what's your unique value proposition, and what's your vision should you be successful for the next 2-3 years. And that's how basically it allows AWS to quantify how much you, based on that, how much how much funds you can actually get. What do you qualify for? So that's part of the qualification process. And the good thing about that, again, it's funding. You fund your project through resources, through a cost of running your application. You need to run a database somewhere. You need to run your application somewhere. You need to have all of the systems somewhere. So it's either you're going to postpone it and hope your first customer will not require to have a real infrastructure. So you're going to wing it. Or now that you know that you have access to these sources of funding, that someone else is funding your project, and all you need is a business plan that can change completely the way you were thinking about launching your own business. Now you can think much bigger, and bigger is better. So all of the lessons that you are learning during your initial launch and working with customers, the first customers early on, based on my experience, at least gave me enough data points so that I could craft that business plan and answer all of those questions from Amazon, from AWS, in order to qualify for that funding. So that's really the way I was able to put that together. Some of it was roadmap, some of it was guesstimation, and some of it was just the initial feedback from design partners or the first few customers. So I had enough to kind of paint a picture, and that picture is the business plan. So let's summarize all of the funding sources that I shared with you. The first one was vendors, right? So infrastructure as a service, so whether it's AWS, Azure, GCP, there may be also some others, but those are the three that I'm familiar with, specifically AWS. I've worked with myself, and I was able to get funding from my projects in multiple companies. And those are not insignificant investments. Legal, like I shared with you earlier, I've worked with different legal counsels, and I was able to fund my entire, all of my legal needs and get network access, etc. So you should be able to do the same. Financial, banking, free, no minimum. You working with someone like Silicon Valley Bank, I'm not affiliated with them. This is not sponsored by anyone. I think that would be a great place for you to start. The sooner, the better. You don't take any risk there. So the business partner program, so in addition to the vendors program that I mentioned earlier, whether it's Activate or whether it's the code, the discounts and the codes and the credits that you can get from Silicon Valley Bank through AWS and many other vendors as well, they have a separate program which goes through the AWS partner. So you will need to work with the AWS partner, not directly with AWS. And then that will allow you to get access, if you qualify, of course, to much larger funding for your project, for your company. And lastly, private investors, friends, family, angel investors using SAFE. I raised millions of dollars using SAFE. This is an industry standard. So you should be able to do the same if you want to go through that route, or you just want to bootstrap all the way. Either fine is fine, whatever works for you. So besides all of that, I just listed some of the other ways to get funded, maybe more the traditional ways or other ways, because those are ways that I either used myself or I engage with or help others to access. This is self-explanatory. Accelerators. There are many accelerators. Many of them are regional. So you may want to see what they offer. Research grants, especially in AI, there are different grants for AI research that you may be qualified for. Corporate AI funds, so different companies depending on the space. So I spent most of my career in cybersecurity, so I'm well familiar with the corporate AI funds in cybersecurity. Those are available, and those typically, at least based on my experience, that's around $500K. So $500,000, and they have their own pre-qualification, and they have some other advantages beyond just the funds themselves that are even more valuable, etc. Angel investors, crowdfunding, bootstrapping, government grants and programs. So I've worked in the past with the brokers or the companies that specialize in working with you to identify government grants that you may be eligible for and apply to those grants. So those grants can be US government projects. Typically, they work on a schedule, meaning there is a due date and there's a selection period and so on. Those cycles are very long, and that's not suitable for what I'm doing definitely today with AI, but also it was not suitable for someone that is starting or looking to grow very fast. So I didn't find this to be very helpful, but it's out there. Those are real programs. There are companies that specialize in consulting against percentage and fee, and they can help you identify the right program for you. So that's it. So if you like this, you may be interested in checking out our community, our Accelerator Gen AI community. There are lots of free resources like this that you may find helpful.